Hello and welcome. This is Jasur from Shanghai Silk Road, also JRN Firm. We're a corporate consultancy based in Shanghai with branches in Uzbekistan and the US. If you would like to become a client, you can check out our services on the website here and get in touch with us. We'll be glad to work with you. Now, in this video, I'd like to talk about how to properly structure your Chinese company if your long-term plan is to withdraw payments from your China company. Of course, it doesn't apply for people who do not want to withdraw their earnings in China, but they want the earnings here in China. So if that's the case, this video is probably not for you. But if you want to take out the money from your China company every quarter, every month, or every year, then this is the video for you. So please watch until the end. I will go through the very important details. Number one thing you need to consider is to set up a company in zero tax jurisdiction or low tax jurisdiction. It can be Hong Kong because of the proximity to China, and also a lot of bilateral agreements with mainland China. So we really recommend Hong Kong as the first step. If not, you might consider locations like Singapore, and also very close, and also low tax jurisdiction. And if not, then maybe you can consider Cayman Islands or even the US, Delaware, Wyoming, or Nevada if you are not a US tax resident. I talked about this before in many different videos, but briefly speaking, if you are not a US tax resident and you don't live in the US, and your earnings to that US company does not come from the US, then your US LLC is basically a tax-free LLC. So that's only like, there are conditions to use US as a low tax jurisdiction. So first step, you need to set up an LLC outside of China in a low tax jurisdiction or zero tax jurisdiction. For example, Hong Kong, it's zero tax jurisdiction when the earnings are coming from outside of Hong Kong. So that's step number one. Step number two, we will use that company that you set up in that low tax jurisdiction / zero tax jurisdiction. We legalize the set of documents for that company, and then we establish a mainland China company for you. And it will take around 1 month to complete the process. You can see in our videos we talked about that in length. So once we set up this company in mainland China, you start operations obviously. And now every quarter you can claim the earnings back to the mother company, which was set up actually in the first step in a low tax jurisdiction. So every quarter, every month, you can claim the earnings from your mainland China company as a parent company. And that's, option number one. But option number two, is also viable option, which you can appoint your parent company as the management company, and you can outsource your China company's management to the parent company and pay on a monthly basis or quarterly basis, however you decide. When you pay from your China company, it's considered as expense in China, and obviously you will not pay any taxes. And at the same time, you don't pay any taxes if it's Hong Kong, for example, because Hong Kong is tax-free when you receive income outside of Hong Kong, from outside of Hong Kong. So when the money basically goes from your China company as payment to your Hong Kong company, you will not pay any taxes in Hong Kong. Not in China, not in Hong Kong. Same goes true. The United States, I gave an example. If you're not a US citizen, if you're not a US tax resident, you don't live there, your US company will not pay any taxes from that earning. Because it's coming from outside of the US. US LLC, however, will face taxes in the US if the money is coming from the US. We have a US company and we pay taxes from the income that we receive from the US. That's common. But when the earnings coming from China, those earnings are not considered taxable. So Another example, I mentioned Singapore as well. The same goes through Singapore and Cayman Islands as well. So you might choose, whichever location applies for you best. But we really recommend Hong Kong in this example because Hong Kong enjoys a lot of bilateral agreements with mainland China. And even if you send money as dividends or earnings, not expenses for your management, you will not pay any taxes in Hong Kong. Not in China, not in Hong Kong. But in most of the other countries, you might still pay taxes in China because they are dividends. All right. For the dividends is around 33%. It's not low actually. Let's say you are paying dividends to your US company, US LLC from your China company, then there is withholding tax. Withholding tax is around 33%. But in the case of Hong Kong, you're not going to face that tax, all right, because of the bilateral agreements. So generally speaking, if your long-term plan is to withdraw all the earnings out to outside of China, then you need to structure your company properly like this. Okay, you cannot be the individual shareholder in this example. You need to first set up a company elsewhere in a low tax jurisdiction or zero tax jurisdiction and use that company as a parent company to set up a company in mainland China. And this is how you operate your zero tax, basically, operations here in China. So once again, it's Jasur from Shanghai Silk Road, JR Firm. Please go ahead and contact us if you have any questions, and we will be glad to hear from you. And we can assist you with company formation in China and a bunch of other countries. And with that, I'm going to finish this video. Thanks for watching. See you in the next one.